Joining us this morning, Slow Ventures venture partner and Open Money Initiative co-founder, Jill Gunter. Jill, happy Friday. Good to see you.
Hey, great to be back. What a week.
I wonder what you make of the action lately. I wonder if you think we're getting some resistance here, at least on Bitcoin, in the high 60s, and whether or not that's related to gold making a move or something else.
Yeah, no, I mean, I think that things have been choppy, but obviously continuing to trend higher. And, that gap higher that we saw in Bitcoin earlier this week, of course, in line with the inflation print, I don't think anyone really would have expected that to be sustained without seeing some resistance. And that's how these things tend to go is, they're still very volatile assets, but there's no doubt that it's been a bull run for the last several months here. And I think my personal view and based on some of the data that we're seeing, I think that we can expect that to continue here, at least for the short to medium term.
All right. Then there's the payment side as well. You got AMC, which we talk about a lot, moving ahead with its acceptance of crypto as a payment mechanism. But then you had some others this week, Ken Griffin at the Deal Book Conference, throwing some cold water on the long-term view of crypto as a effective mechanism for payment. Why do you think that's so choppy?
Yeah, look, I mean, I think that Ken Griffin, in a way, is right to point out some of the difficulties of interacting with some of the crypto products out there from a payments perspective. And I think that really what that speaks to is the diversity of products that exist within crypto at this stage, where the reality is not all of them are suited for payments. Not all of them are going to be suited for even DeFi or sort of, more high frequency forms of interaction and trading. Not all of them are going to be suited for NFTs. I think what we're seeing is that different cryptocurrencies, different Web3 platforms, different layer ones as they get called, whether it's Bitcoin or Ethereum or Solana or Chia or some of these others that have been developed, they're all going to be used in very different ways. And so it's fair enough for some onlookers to scratch their heads as they see folks like AMC taking on Bitcoin payments, because there are certain ways in which, Bitcoin is not actually, I think, that well suited to today, at least, going out and buying popcorn with it. There are other cryptocurrencies that are better suited to that. But I think that that's sort of some of the complexity that we're starting to get into there in terms of the commentary.
I mean, it's such a key point you make, and it's certainly one we've heard from other crypto enthusiasts and Bitcoin specifically supporters. I mean, even I think about Michael Saylor from MicroStrategy, who was on the show not that long ago. This idea that where Bitcoin specifically is concerned, it's viewed more as a store of value rather than, say, a payments mechanism. Given this entire conversation, Jill, and the fact that there is such a big, broad, in some cases frothy, cryptocurrency landscape afoot right now, the fact that we are starting to see more regulation, at least here in the U.S., and we just got that infrastructure bill finally passed through the House, how does this shake out?
Yeah, so, I mean, look, firstly, I think that I have to acknowledge it's going to be a complicated and at times hairy discussion, I would say, over the coming quarters as we start to parse out what is cryptocurrency good for, both as a whole and then within these different sort of subsets of the products that are emerging. But I think that it's a very healthy sign that we're having this conversation, that sort of more and more, mainstream players, whether it's corporates or fund managers and so forth, are having these conversations and starting to parse all of this out. And then, as you point out, regulators are starting to have these conversations as well. And while in many ways the infrastructure bill and the wording in there as it relates to cryptocurrency brokers, I think is the main kind of point that people are debating around as to whether that wording and the definitions around that should stay the same. While that has been, in my view, and I think in many of the industry's view, a failure, at least in its current passage, I think the very fact that we're able to have those conversations with Washington and we're starting to parse out, again, what does it mean in cryptocurrency and in Web3 to be a broker, I think that's a very constructive sign for the space as a whole, looking, again, over the long term.